All right, folks, this is a good one. CalVet versus the VA loan. CalVet versus the VA loan. What's the difference? Which one wins? I deal with this pretty often because I do specialize in VA loans. And I physically live in California, in Southern California, even though, Patriot Pacific, we do loans all over the country. I physically live here. And I have had and still do a lot of my own personal opinions on the California-based loans because there's a lot more than the CalVet loan. CalHAFA, there's ZIP, there's all sorts of stuff that California provides. I'm going to do my best to leave my personal views out of this, and we're going to strictly look at VA benefits on what provides what. Okay, I'm probably going to add in. I can't help myself. I'm going to add in some of my personal views and experience. It's not just personal, it's from experience, okay? And past clients, things like that, phone calls that I've gotten. So yeah, let's get into it. CalVet versus VA loans. So what's the difference? This is the big one. I really need you to know right up front that CalVet is not the VA. CalVet is not a VA loan. Both are designed to help eligible veterans and service members buy a house, but they are two completely separate programs, okay? So the VA loan is a federal program. If you've watched any of my stuff, I think it was 1942. It's either 1942 or 44. 42 or 44, I can't remember. I think it's 42. After World War II, they created the GI Bill benefits program, all right? So a lot of us, like myself, I served in the military. I was in the Marine Corps, did my 20 years, retired. But for individuals, whether you did 2 years, 4 years, 5 years, whatever it is, whatever time you served, the GI Bill was actually built for us. Okay, it was to really help us as we were transitioning out of the military. Part of the GI Bill is the VA loan program. It's the VA loan program. And I've done a ton of videos on the VA loan, so I don't want to get too lost in it. But I just want to make sure you understand that is a federal program that was created in the GI Bill for us. Now, CalVet is a California state veterans home loan program, California specific. And every time I say California specific, I'm going to do my best to bite my tongue because it's not a bad program. Okay, I think the CalVet program, so because if I don't get this out, I'm going to freaking lose my mind while I'm going through this and putting this video together for you. CalVet works very well for a lot of people. VA, federal, is better for a lot of people in different ways. They both have a purpose, right? Sort of like it's easy for me to say the Marine Corps is the best service that exists. My father, who's a retired Air Force guy, and I remember visiting him when I was still active duty and he was still active duty, and I went and visited him, and I was like, there's no way I could be in the Air Force just going on base. I was actually in uniform. I went and saw him, and I was talked to because of just how I was talking. It was hurting people's freaking feelings, and that blew my mind. I'm like, this is the military, right? But you got to understand, every service has its purpose. So if you didn't get what I was getting at, that's my point. Every service has its purpose, and they build that service around that purpose so they can effectively wage war for how that service is supposed to wage war, whatever that looks like, unless you're the Coast Guard, right? They wage war in a different way. They aren't like, I'm sorry, Coasties. If you're a Coastie and you're watching this, I apologize. Because I live in the state of California, when I apologize, you have to forgive me. And we get to move forward like it never happened. All right, now, so let's move forward. They're two completely different programs, okay? CalVet is California State Veterans Home Loan Program. That's what it is. The VA loan is a federal program. So if you're eligible as a California veteran, it's worth comparing both. And I'm going to tell you, it's worth comparing both. With that said, and I'm going to get to this, but the VA loan, there are a lot of banks and a lot of lenders like myself that provide VA loans. Not many, in my opinion, specialize in VA loans, but there's a lot of people that provide VA loans. When it comes to CalVet, not as many people provide CalVet. So I would highly recommend that as you're doing your research, you get with somebody that provides both. Then you could set them and look at them side by side. There's the camera. Side by side, right? So you can get a view of what might work best for you. All right, so what is the VA loan? Let's just go into it briefly, and then we're going to go into the benefits. We'll go into some of the pros, the cons, and then we'll get into the other one, right? So Federal VA Home Loan Guaranteed Benefit, which I told you, it's available nationwide, and you can obtain the loan through an approved private lender, okay? Not normally direct from the VA. There's a lot of confusion on this. There's a couple companies, one company in particular that really bothers me, because when I talk to people, they already went through this company to try to get a pre-approval. They were very disappointed. They deeply believe that company worked directly for the VA because of the way it's named, because of the way that they present themselves online, and when they communicate, they sound like they want to convey, I believe, they want to convey and give it an image that they work directly with the VA. They don't. Okay, these are private banks, private lenders, it's not normally directly from the VA. Okay, but what the VA does is they guarantee a portion of the loan against the loss. And I've done a video on this one recently, and I broke down kind of how the 20% works, et cetera, et cetera. I deep dove into it. So if you want to deep dive into the VA loan, go back and look at some of my videos on YouTube. You can look up KDM Lending Team, KDM, Kris Donovan McCullough, Kris Devin Mattis, Kris Donovan McCullough, KDM Lending Team. And you can look up a lot of the VA loans videos that I got. But that's basically what they're doing. They're guaranteeing a portion of the loan against loss. And it requires a VA eligibility and a certificate of eligibility, okay? So it's going to be required that you're eligible, and you get a certificate of eligibility in order to use that program. It's generally intended for homes you're going to occupy. And when I say generally, I'm going to explain the difference. So it straight up, it's for a primary residence purchase. Primary residence purchase. However, what's really cool with that is, and this is where it goes into the VA benefits, you can get a single family home, you can get condos, you can get multi-units, 2 to 4 units. So you live in one and you rent out the other 3. You can get manufactured homes. You can do construction with the VA loan, VA one-time closed construction loan. You build your dream home. There's a lot of neat stuff you can do with it. But the VA itself does not set your interest rate. The lenders do. So this is the other one. A lot of people believe, well, I'm getting the VA loan, so the VA is, what's the rate? That's always the wild one. What's the rate? I need to do a video, difference between brokers and people that are not brokers. So example, Patriot Pacific, who I work for, brokered with a lot of different banks. And a lot of those different banks are going to have different interest rates available for the VA loan. When we get a full file, or when I sit down and do a full file with you, if you end up calling me, right, I'm going to look at everything, the full scope of what's going on, and that will help me decide which bank we're pretty much going to choose to do that loan with. That bank will give us an overlay of what that rate will be for the VA loan, okay? So I need you to understand that, because there are some differences. So let's talk about one of the other things that people always, actually let's jump straight into benefits, right? So zero down. The other one is no mortgage insurance. Just did a video on this one. Competitive financing, extremely competitive financing. I'm a big fan. If you want to go check it out, go on mortgagenewsdaily.com, mortgagenewsdaily.com. Mortgage News Daily is a really good little spot. When you go on there, I'm looking at it right now, click on mortgage rates, and you're going to see today's mortgage rate. And those rates change every day. So you can get a kind of a guideline of where it sort of starts. And typically, almost always, whatever it's showing, which is the going rate, your rates are always going to be below that, depending on the bank. So I don't know, that's just a little extra tip for you. So competitive financing, no mortgage insurance, can be used more than once, which is huge. So you could buy over and over and over and over and over your primary residence using the VA loan. And you can potentially have more than one VA loan at a time. I've done videos on this as well. I own a home. It's my primary residence. I decide I want to purchase another home, depending on the eligibility that you have left, or if you pay the gap, you can keep that house, turn it into a rental, and then you could buy and purchase your next primary residence with a VA loan and have 2 at a time. VA loans can also be assumable. Some of them, most of them. I was going to say some. Most of them are going to be allowed to be assumable. I've done videos on assumable VA loans as well. So let's talk about the one that always kicks people in the teeth. It's kind of like a shock factor. They're like, what is this? The VA funding fee. So, the VA doesn't charge a monthly mortgage insurance, right? And we've talked about that. So that's one of the benefits. However, instead, what many borrowers do is they're going to pay a one-time VA funding fee. I'm going to say it again. Pay a one-time VA funding fee. The fees varies based on factors like, your subsequent use, a down payment, and it can typically be financed. So keep that in mind as well. But here's the thing. Many veterans with qualifying service-connected disabilities, like myself, don't have to pay that fee. So whenever you're talking to a lender, you should definitely bring that up. And a lot of people do because they do their research, and that's how a lot of people find me on here. They basically say, hey, just so you know, I am a disabled veteran. This is my disability rating. And we make sure we take that into account when we look at the VA funding fee, right? And then certain surviving spouses qualify for the active duty. Purple Heart recipients can also be exempt, okay? So now let's talk about what is CalVet, because we talked about VA overall. These are overall. I'm not deep diving into this stuff. But let's talk about the CalVet, California Department of Veterans Affairs Home Loan Program. That's what it stands for, CalVet, okay? And it's specifically designed for eligible veterans purchasing, refinancing, qualifying California properties. And CalVet is much more directly involved. That's the best way I could put it when it comes to financing than the VA typically is. Just expect that you're going to be doing a little bit more. You're going to be a little more involved when it comes to what we're asking you for as far as paperwork and what we got to provide. Okay, that's the nicest way I could put it. But long story short, there's a major structural difference. It's just different, right? So VA backs a loan made by a private lender, and CalVet operates in its own California Veteran Home Loan Program. It's California, think government. Okay, think government. Now, if you're from California, I'm not going to leave that out because it's just mean. I live in California, so I'm not being mean on California. Just keep in mind, we live in a broke state. I said it. We live in a broke state. So you have to look at every angle on what they're providing and why are they bypassing federal loans to create their own. Just a thought. Okay. So anyways, here's one of the most interesting ones that I think when it comes to the CalVet loan. CalVet historically is going to use what's called a contract of sale or a land contract structure. So what does that mean? It's about how title is held. When you buy a home with a VA, FHA, or conventional loan, you have the title to that property. You get the title. The bank is funding it, okay? You're going to have a mortgage on that, primary mortgage. And then you have the title, your name's on it. You own the property. With CalVet, California is on title. You are not. Easiest way I could explain this, because some people really get confused by this. You are renting to own. You're renting to own. You do not have title to the property. It's not yours. It's California's property until you pay it off. Now, this is where it gets, and I didn't want to get into this. This is where one of the negatives are. Let's say something goes wrong, you default on the loan. By federal law, there are a lot of federal regulations to protect you as the consumer because you own the title to that property. I'll let you work out the rest. Okay, so CalVet holds a legal title while the borrower holds a beneficial interest during the repayment. It's very different from normal VA mortgage trust deeds. It just is, okay? So it's definitely something to think about, something to be aware of. I know it shocks some people, especially if they go into a default. They call me up and they go, what can I do? You're in trouble. You got to pay it back. You got to deal with it. You got to cure the loan and deal with it. Otherwise, California will put you on the curb. I'll leave it there. So, property insurance. Property insurance is a little bit different too. When it comes to the VA loan, there's a ton of different insurers you can call up. Like I love USAA. I also love a couple other local people that I use. When it comes to CalVet, totally different. They keep in mind, this is their own hustle. They created their own thing. VA nationwide, CalVet California, VA federal government, CalVet Sacramento. Okay, so it just moves a little bit different. So CalVet has its own property insurance structure um, when it comes to being associated to the loan. Okay, so just remember that and expect it as you kind of get in there. Now, eligibility. VA eligibility comes from the federal VA home loan benefit, as you know we've discussed. Okay, when CalVet has its own eligibility requirements, so qualifying for one, it doesn't mean you're going to automatically get the other. This is extremely freaking important. I will tell you what I normally see. What I normally see is individuals that cannot get qualified for a VA. I'm giving you a nugget here. Pay attention. If you're still watching at freaking 16 minutes, it's because it's important to you. Some people, if they cannot qualify with a VA home loan, they can qualify with the CalVet. Different requirements. Just because you qualify for one does not mean you can qualify for the other. They're different eligibility requirements. But I just gave you a nugget. Almost everybody that I run into that uses the CalVet, it's because they can't or struggle to get qualified using a regular VA loan. That's important to know. So if you're a real estate agent and you talk to somebody and you're kind of, which you shouldn't be doing, by the way, and you're kind to pretend to be a lender because you know stuff and you're really smart, even though you weren't licensed for it. Sorry, I'm picking on you guys, but it's true. It just blows my mind. It's like, yeah, I collected all their stuff already. Oh yeah, that's super illegal. Why'd you do that? What? No, don't touch the what? Why are you touching their private, personal, financial information that should be protected to your laptop over email? Okay. Anyways, sorry, agents. I don't mean to pick on you. Yes, I do. A little bit, a little skosh. So it's going to be a little bit different, the eligibility in general. Now, let's talk about interest rates. Okay, we'll jump straight to this. Don't assume the VA is always going to have the better interest rate, or CalVet is going to have the better interest rate. The loan pricing varies among private lenders when it comes to the VA loan, and CalVet establishes pricing for its own program. Okay, but this is a big one. Rates change every day. Rates change every day. It's mind-boggling to me that a lot of people can't wrap their head around this. I'm going to give you a quick tip. If you're going to compare an apple to an apple, compare an apple to an apple. Here's the apple to an apple. I'm going to tell you. If you're going to get a rate today on the VA loan, get a rate today on the CalVet. If you get a rate on the VA loan today, and 2 weeks from now you get a rate on the CalVet loan, you are comparing an apple to a suspension bridge. They are not the same. I will say this as well. I'll take it a step farther. If you call me up and I give you a pre-approval today with today's rates did go down a little bit, but yesterday's rates were garbage. So let's say yesterday's rates with yesterday's rates. And I gave you a pre-approval with an estimated rate from yesterday's rates, which were garbage. But then you call a different person today and they give you the better rates today. Guess what? I could give you the better rates today too, because they change every day. So I need you to understand that same thing. You can't compare CalVet to VA unless you're doing it the same day. Otherwise, you're comparing an apple to a suspension bridge. So make sure you really do that. All right? Don't be a goofball and screw yourself because you weren't paying attention. But this is the other one. Rates. Rates are one of those sticky points for me. People look at the rate and they consider that gospel. Straight up. They're like, well, the rate is this. And this guy said the rate's that. That's the better guy. There are so many other things to look at. You have to look at the loan in total. The loan in total. The rate is only part of that in total. In fact, sometimes when you compare or you bounce off different rates, you're talking about maybe a $35, $25 difference per month, maybe, and it's also estimated for that specific day. Okay, so interest rates are important, but what about points? What about lender program fees? What about the funding fee? What about insurance costs? What about cash required at closing? Monthly payments, long-term costs. You got to look at the loan in total. If you have a good lender, they're going to break that down for you. It's really important. The lowest advertising rate isn't automatically the cheapest loan. What I would tell you that I found, whomever is going out of their way to show the bottom dollar super cheap, ridiculous rate, you're gonna go on a ride. They're gonna take you for a ride, because I'm not saying they're lying, but they're probably omitting information. All right, just saying. Okay, so next, property matters. This is what's really, really important. So what are you buying? Are you buying a single family home? You're buying a condo, manufactured home, farm, rural property, new construction? You're going to build your dream home? The programs don't necessarily treat every property identical. Okay, so make sure the property works too. So when you start talking to a lender, somebody like me, or me, call me, you need to make sure you let them know kind of upfront what you're looking at to ensure that they meet both guidelines, VA and also CalVet guidelines for the type of home that you want. Okay, so why VA makes more sense for someone? Nationwide federal benefit, huge network of VA lenders, ability to shop multiple lenders, it's important, no monthly mortgage insurance, funding fee exemptions can be extremely valuable, broad VA specific purchase, refinance options, like there's a broad range of things you could do with it. And there's a familiarity overall by lenders when it comes to the VA program. Now, CalVet. Why CalVet may be worth looking into instead of VA. California specific veteran program, different financing structure. I already told you what that means. Wink, wink, right? So if you potentially are going to be less qualified for a VA loan, wink, wink, CalVet might be your beast. That might be the beast of burden that you're going to ride to the finish line. Just my thoughts. All right. So different pricing, fees, insurance structures, and could produce a better overall financial solution for you. Okay. So I'm not saying CalVet is better. I'm not saying the VA loan is better. The point that I'm trying to make is it depends. If you're smart, you're going to get a lender to look at both for you. Okay. And present both to you for you. I personally think the VA loan, if you are highly qualified, is almost always the better loan. But it doesn't hurt to look at both. Okay? So, big mistakes. Something that California veterans say. I'm using my VA benefit, so a VA loan must be my only option. Not true. We've been talking about this whole time for 22 minutes. Not true at all. There's multiple options, and CalVet's definitely one of them. There's actually other options too. But, not necessarily. Get the numbers for both. Compare. Okay. Question should be, which program is better? No, it shouldn't be. That's a horrible question. Which program is better? You can't say which one is better. It's definitely going to be dependent. What's your credit? What's your income? What's your entitlement? Eligibility, disability, funding fee status, property, current pricing. Oh, I almost kind of alluded towards. I don't know if you heard. I'll say it one more time. Entitlement and eligibility. I'm sure you've watched some of those hack videos out there on how to hack the housing market with the VA loan. If you heard what I just said, you can do a little research. But anyways, biggest takeaway. The VA and CalVet are not the same. They're just different, okay? California veterans, you have a choice. You can look at two different really cool options. So if you're a veteran buying a home in California, don't just ask, can I get a VA loan? Ask, should I compare the VA and CalVet? Absolutely, I think so. You earn the benefit, okay? So make sure you actually use the options that make the best sense for you. That's all I got. I hope that's clear as mud. But that's the best, most honest video I could give you comparing the two different types of programs. And again, based off of my experience, doing a whole lot of VA loans. Again, this is the other one. I'm with Patriot Pacific Financial Corp. And if you don't know about Patriot Pacific is known for doing VA loans across the country. It's kind of the specialty. And yeah, we know what we're doing. So compare the two. They're a little bit different flavor, right? It's almost like you can't, Hemet is Hemet and Temecula is Temecula. They may have a lot of things that are similar, but they are different. That's the VA loan and CalVet. Best way I could put it. All right, folks, appreciate you. Do me a favor, if you enjoy my videos, which I love, people, I got a bunch of new subscribers. Subscribe. Put a like on there, send comments. I love replying to comments whenever I get some time. And as always, if you have a question, just call me. Just call me. My phone number's always, I post it in everything. You can call me direct on my cell. You can shoot me a text message. I have people text me because I think they're afraid to talk to me, which is fine. It's the eyebrows. I don't know if you can see those. I think it's the eyebrows. It could be the mustache. I don't know. But yeah, look, just call me. I'll answer your questions. You don't need to do a loan with me. I answer stuff for people all the time, all over the country. And they don't need to use me like, hey, I'm already working with lender. I don't care. You watch my video and I appreciate it. And if I can answer something for you, I will. So give me a ring. That's all I got. Appreciate you. Hope this helped you out.